Yeah, well, it's definitely it's a trial by fire. I mean, and depending on how big you buy, and you've got to have a fair amount of capital behind you to start, just by virtue of the rules of commercial lending. But they do make very good investments, yeah. And I think part of what I like about it is different to passive investing, where you're just putting your money in stocks or shares or whatever, because really you've got no control over the performance of it. Whereas what I like about investing in a business like this is that even if you did nothing, in theory, if you did nothing, and say that you buy it 4 times its renewal, and by nothing I just mean you don't grow it, you just sit on it and look after it, and see the people and help them, then it's typically around a 25% return, which is a good return on any given day anyway. But what I like about it is that you've got a lot of control over how to add value to it. It's like you go buy a house, you can either just sit on it, leave it as it is, or you go and renovate it. You know what I mean? And it's kind of the same with buying a business, because you can get in there, you can find opportunities, you can get referrals from within it, you can put systems around it. There's just heaps you can do to streamline it. So it just makes for a good investment if you're the kind of person that you like to be able to control a little bit of your world and what your money's doing.
How does it work? Like, people told me they borrow money to get it. Like, how would that's a big punt by the bank, isn't it? And how do you convince them? Or have you never borrowed money to do it and you're just like
Yeah.
flush?
No. I've always had to borrow to do it. You got to start somewhere. So the challenge is, like most commercial lending, you need usually around 50% deposit, and because the banks typically consider it an unsecured loan because it's not secured against any property unless you're willing to put your property up. In my case, I wasn't willing to put property up because I just think that if you're lending for business, particularly through what we've just been through with COVID and everything, you just never know which way business is going to go. So I don't like to blur those lines. But some people do, and some people make the best of it. And so, yeah, you put 50% in, and I find that within 4 to 5 years, it's paid its own loan off. And then from there, you're basically making money. But when I say making money, what I have done just incrementally is I've bought different books of business, is kind of reinvest back into the business. So when a loan gets cleared, it's like, sweet, okay, I can employ somebody else now because the cash flow is freed up to do that. And that's just how you keep scaling step by step. So yeah, the challenge is getting that initial deposit, to be honest, and then finding the right opportunity in the right area. Most advisors, I think, are probably quite limited to their geographical region, but you don't have to be. Like I've got business on both ends of the country, and I just live between both. As we were talking before, I live 6 months of the year in Queenstown, 6 months north of Auckland, and so that really helps from a business point of view, because I can see people on both ends in person. And New Zealand's a small country, man. Like if someone wants to be seen and I don't happen to be in the area, it's easy for me to fly up to Auckland and go see them. You know what I mean? So I think speaking to other Kiwi advisors, is like the world, well, the Kiwi world, New Zealand, is your oyster, because I think now more than ever since the days of COVID, you can be remote as much as you want to be. Having said that, I still completely affirm that seeing people face to face is always the best. I don't come to suggest that this is a better way to do it, but certainly that it's possible and it's workable. I'm probably 70-30, like 70% remote meetings and 30% in person, because there are those people that really prefer the in person. But I give everyone the option, and most opt for the online meeting. So yeah, I say all that to say that, hey, as an advisor, if you're looking for a business to buy, it doesn't necessarily have to be in your geographical region.
Yeah, the only barrier is that initial trust build. Like, so I did a comparison between booking phone calls,
Oh yeah.
Zoom calls, in person in the office, and in person at their place.
Oh wow. Yeah.
And but it's a cold audience, so it's marketing to a cold audience that doesn't trust or know you.
Sure.
With Zoom, 30% show up rate. I don't know if
Right.
the tech or the trust. Phone call, 50 to 70%, probably about 55 average.
Right.
In person, similar to a phone call,
Right.
but if you make them do things that come to you, similar to a Zoom call.
All right. Okay.
So it can work if you've got that trust, but how do you think about, you've got this new book of business, a whole lot of people, maybe they know they got an email they don't read, and now suddenly you're the advisor. What happens? What do you think
Yeah.
about that part?
Yeah, sure thing. That you raise a good point, because there's a huge difference between looking after a client base you've already got. And I know a lot of advisors, they sit in their office and all their clients come to them. And I mean, that's I suppose what you can do after you've had years of relationship already. But when you just bought a book, yeah, I think you got to get out there. I think the best way to build rapport and trust is to go see someone. Um, and it's a bit harder for them to refuse, if you like. Not that we ever force seeing somebody, but if you send them a text and you say, "Oh, do you want to meet? I'll send you a link. We'll meet online." It's easier to fob off than you call someone and say, "Hey, do you want to catch up for coffee next week?" You know what I mean? So yeah, I'm very much a fan of kind of communication on a number of levels. We'll send out notification that it's happened, but I'll even get, so the exiting advisor who I've bought the book off, I'll get him to identify key clients, and we'll go see them together for a set time frame. Particularly the ones that are a sizable API that you want to make sure you're getting around first. So yeah, definitely you can't, even in this kind of mobile online world that we live in, you can't beat that in-person rapport building. There's nothing that beats it, I don't think.
How do you structure it? Like, what's your lessons with the actual processing of the deal? So you say to them, "Hey, I'll buy it if you come with me to these first 30 or whatever." But then they got options. It's not too hard to sell an insurance book of business because of the security of it. But they just might not have the mates that would actually buy it, and they just could be complacent. But yeah, what do you think about in terms of the deal and making it work for both of you and negotiating and
Yeah, sure. It's a good question. I think, like, if I think back on every transaction I've done, the advisors that are exiting are always really keen, actually, just to go see their top clients, because they want to transition out and they value the relationship enough. They've dealt with them for years, so they care enough still to go, "Hey, this is my formal see you later." And I think they prefer that than just an email coming to them, to their ex clients, from this new person, and after 20 years of looking after them, this guy's just gone. You know what I mean? So I think it's a win-win. I think the exiting advisor likes a bit of a goodbye process, and of course we really like an intro process. So I've never found any resistance from an exiting advisor to do that. The hardest one, though, that I did was from an advisor who passed away, and so I basically had to pick it up, and it was basically all cold intro. So the clients didn't know until I told them, and because of the sensitive nature of that, I had to make sure I was very communicative and very proactive. It's not the kind of news you want to get just by an email. So but yeah, it's not a hard negotiation to get an advisor to come with you for a little bit. You have to put a limit on it. They don't want to do it forever and a day. And usually it's them that are identifying the ones that are important to do that with, because of course I don't know. I've never met these people yet. So yeah, I think it's just a standard thing. I think most advisors who are selling a business would expect to do that for a time period.
yeah, and it's also the type of advisor you'd want to buy a book from. Like, I imagine it'd be
Yeah.
self-selecting. Have you ever like I've called, I think, every advisor in the country I could find,
Wow.
and they there's ones where I'm like, oh, that's not it. Like one I was talking to has a deal in 1990 where he's not actually an advisor anymore, and
Right.
he's still getting commission, and
Oh,
then they didn't even like their clients, and so you could sort of like, oh, probably not gonna try that book of business. But have you ever had that moment where you're like, oh, I don't know if I want to go down that route, and how do you identify a good book of business?
yeah, great question. I mean, I've actually come to learn that the advisor themselves is a huge part of what that client base is going to be like. I used to just look at the client metrics, like where they were, how old they were, geographical spread, what type of products they had, and you still look at all that. But yeah, there was one particular lesson I learned in the early days where we took on this book of business, and our interactions with the advisor had been pretty good. Like we didn't have any issues with them. Then we started going around the clients, and so many of them were like, "Oh my goodness, he's retired. Thank God we can cancel our insurance now. He never let us do it." And we're like, far out. And of course, we're like nice guys, so we're not stopping them in the sense of fighting them in the same way, trying to encourage them to keep it if they need it. But yeah, there was one particular, that was that one where we lost a huge amount of business in the first 12 months, just because people were finally relieved to be rid of this other advisor. So that was a harsh lesson in learning. We actually need to profile the person, the advisor, and who they are, and what their style is. In fact, and it really, your only way of truly doing that, I think, is to go on appointments with them before you buy the book to see how they interact with the clients. And you may or may not want to do that. And maybe the exiting advisor wouldn't want to do that either. But I don't know. I've come to learn that that's an important aspect. And since then, anytime we buy a book, I have a 12-month retention clause now, because back then I didn't in that particular deal. And we lost, you're paying 4 years ahead of a renewal you've just lost in the first 6 months. So that's one of my rules now, retention clauses.
So like if people don't retain the first 12 months, then that's not included in the purchase amount, or what is that actually? I don't know what that is.
Oh, sorry. Yeah. So what I mean is I think it's a bit more standard nowadays, and I think it's just good business practice anyway. I think anyone who's got a good head on them would do this by default. But there's various iterations of this, but essentially what we'd say is, hey, anything that falls off in the first 12 months is not part of the original purchase price. And we might have a deal where we say, well, we'll agree to the total sum. We'll pay you 80% now on the settlement date, and then the remaining 20% in 12 months' time, minus anything that's fallen off. I think probably a lot of people do that nowadays, but back in those early days when I was starting out, didn't do that, didn't really know. It was just kind of, like I say, trial by fire. And that just protects the purchaser, I think, because you're paying for renewals 4 years ahead of time, or 3 or 5 or whatever your multiple you agreed to. So I think a vendor has to be pretty reasonable in understanding that that's a valid concern for a purchaser. So yeah, I'd feature it every time now. Does that make sense?
Yeah, and it's also how people respond to that request is also an indication of what type of advisor they are as well.
Yeah.
And incentivizes them to actually be a part of that process and handing them over. How do you ever psychologically profile them, or see what the aura is, or have a beer and then get to the stage of meeting the client? Or what do you actually think about in terms of the right kind of attributes?
In terms of the advisor or the client? Yeah. I mean, the cool thing is, and what most advisors will find, especially if they're looking, a client-based opportunity usually comes up from within a network you're in. And so most of the time, it'll be an advisor you already know and have dealt with for a long time. It's pretty unusual, because there's such high demand. It's pretty unusual you come across a client base of someone you just don't know, because usually that person's got their own network and it would have been offered to that network first. So yeah, I think most of the time people have a pretty good feel for it. But the other side to it is that you're not just looking at the advisor, the principal, you're looking at the staff. Like most people have an admin person, or maybe a couple of advisors, and sometimes they're actually part of the deal. So for me, I'm always quite keen to, if the advisor's stepping out, I'm quite keen to keep the admin person on for quite some time, because there's a degree of continuation there for the client's perspective. Well, it's a win-win really, because I might not have the admin capabilities now to take on a new base, but if it comes with it, then I can absorb it pretty well. And it's continuation of relationship for the client, because they're used to dealing with the admin person. But from a commercial perspective, you've just got to factor into your figures that, okay, you've got your borrowing, and now you've also going to have to pay an admin person. But that's pretty standard anyway, because you can't operate a client base and not have admin support once you get to a certain scale.
So essentially, you're doing the 4-year multiple or whatever, depending on that setup, and then a salary or wage on top to the person.
Mm-hmm.
How do you break the news to them? What, like, do you wait until the deal's done and then, oh, surprise, your new boss?
The admin person. Usually the admin person is pretty well embedded in the business. They know it's been happening, and usually they're part of the process for months ahead of time. So I think the existing advisor would say, hey, look, I'm looking to retire next year, and we're going to start looking at putting this to market. And the admin person is usually involved in getting all the data together anyway to get it ready for sale. So I've never found it to be a surprise. It'd probably be a bit of a red flag, actually, if it was a surprise to the staff. Maybe. Yeah.
So you get a 50% deposit, and then it makes money in 4 years. Is that, and then it should, and then is that based on just from the recurring revenue, or because there's more opportunities that come from it?
Yeah. So if you were just relying on the recurring revenue, the renewal, and based on the assumption that it was just going to continue growing at inflation rate, say, which in insurance terms is usually quite high, especially if it's like one book we bought had a lot of medical cover as part of it. and medical cover has a cost inflation to it that's higher than most things. It's usually around 15%. So we know that people hold on to medical cover for a long time because they've used it a lot. And we also know that the cost of it goes up by about 15% a year. So there's pretty good, solid, forecasting you can do based on that. But yeah, so if all your accounting was that, yeah, you'd be clear in 4 years, more or less. Like I say, sometimes you have to deduct a salary from that. But having said that, there's other opportunity too. Like most of the time when we're buying a client base, it's usually off of an older advisor, and that typically means an older client base as well. So we know that an older client base is usually going to have a shorter lifespan, but it's kind of like if we do a good job and if we look after those people, they'll introduce us to their family and their next the next generation down. So we tend to get growth that way. Particularly if mum and dad has held the insurance policy for years and now their kids are adults and they want to split them off and have them take on their own health insurance as well. That's a perfect introduction into those other families too. So yeah, I think if you look after a client base well, you get rewarded for it for sure.
So it's mainly who they know and less about them. Like they're probably not underinsured very often, I imagine.
Yeah. It's very seldom. In fact, when you're buying an older client base, you've got to be conscious of the fact that most of these clients are on the decline in terms of their insurance needs. So they're coming into a stage of life where their mortgages are lower, the kids are older and left home. So their insurance needs are going down over time. So that's one of the risks we got to look at. But like I say, you can acknowledge that risk, but pick it up on the other side by picking up their kids and, getting referrals from them and things like that. So it comes off, but there's ways to keep it on or put it back on, I should say. And one of those things, the other side is that when I talked about the analogy of a house and renovating it, adding value, adding another room to it, say, you can do that with insurance bases because usually you're only buying, say, risk insurance. But if you've got the right team around you, you can add on fire and general to them, KiwiSaver, investment advice. So with that one client base, you can usually utilize 2 or 3 or 4 different advice lines that you can add to it without having to go find them fresh,
Well, makes sense. Is there something you look for that makes the metrics valuable? Like the way, like there's more health insurance and they're all in their 30s, so that's a good investment. Like what do you think about with that?
Yeah, that would actually be the 2 biggest value components, I think, is their age. If they're young, you've got a really long lifespan with them. And health insurance is by far away the stickiest cover, so they're least likely to cancel that. It also comes with more admin because there's more claims to do on health insurance, but that's fine. You can structure to that. But yeah, I'd say age was one thing. Is definitely the biggest thing I'd look at. The product makeup. I know, for example, that if a client base is in their mid-50s as an average age, I know that if life insurance is a big portion of that client base, then I'm probably going to lose a lot of that over the next 5 to 7 years because life insurance is the first cab off the rank as people start to get closer to retirement. So you're kind of looking at, okay, what are their ages? What are their likely life stages to be in the next 5 to 7 years? And what covers they're likely to need? So which ones are going to hang around? So yeah, there's a few metrics, but definitely, like you mentioned, age and health insurance is a big one. But in a funny roundabout way, a client base that has everything else and no health insurance, we found that too, is also an opportunity because you can go and add all the health insurance. So it's kind of you look at it either way, really.
What's interesting because I was trying to work out what my hero offer was in advertising. Do I run income protection, mortgage protection, health insurance, life insurance? I tried life insurance. You track people worried about dying, so they're usually sick and they don't have much money on average. Then you have health insurance. They don't have much money, but they are motivated because they know the public health system isn't good.
Yeah.
And then mortgage protection, you have people that see the importance of it. They're qualified by the bank, but they don't have much in terms of the premium that they can put into. Income protection, I'm trying just because it tracks people with income. But I sort of didn't think about doing health insurance with a different qualifier because the upfront commission isn't as high, but then from a value add, from a business standpoint, it's more valuable what you're saying. What would you say is your hero offer if you're to start a business thinking about value?
Yeah.
What would you focus on?
From a marketing perspective?
not just market, just like if you could meet anyone you wanted
Yeah.
and start with one product
Yeah.
and with a sole goal of making your business more valuable,
Mm.
what would you focus on?
Good question. I would say young families and health insurance. I mean, obviously, you're wanting to get the whole gambit, and I'm often preaching go wide, not deep. So don't don't get health insurance with all of its add-ons and spend heaps on that and not spend on anything else. Like, maybe just have basic health insurance and so that you've still got a budget for everything else as well. But yeah, I think young families with health insurance, because since COVID, like, I mean, health insurance was always on a growth path, but since COVID, it's skyrocketed. Like I've got guys, a friend of mine who runs a business purely from online leads, and it's purely about health insurance, and he's the biggest health insurance writer in the country, because I think people are more aware now of the pitfalls of the public system, and everyone knows someone too that needs treatment that can't be funded through the public system, and so the awareness is a lot higher now. So I just found that psychologically people are just far more conscious of health insurance, and therefore that's an easier opener. And so from a commercial perspective, as a business owner, you're like, okay, well, if you've got a young family and they've got health insurance, they're not going to get rid of it most of the time. And you've got a long relationship with them, and as they go through their life stages, there'll be other needs at different times as well. My personal favorite space, like if I could just cut everything back and go, we'll focus on one thing, it would be in the business space, like the multi-shareholder buy-sell space. But that's a hard one to, I think, start cold from, because those kind of referrals come by word of mouth and networks. They don't tend to come. You haven't got business owners of multi-shareholder companies clicking Facebook links for insurance advice. You know what I mean? Typically. So, yeah, but that's where I'd focus if I could solely. Yeah.
Interesting. Yeah, I dabbled a little bit in the shareholder protection. I was like, if you're in a partnership, you might end up in a business with their partner if they passed away. And I was like, well, what would that? And then they're like, what's a buy-sell agreement? And I didn't know you could buy people out with insurance. So it was an interesting.
Yeah.
The problem is, if I was to do that for advisors, there's a lot of complexity and delay and a lot of people involved. So
Yeah.
you'd bring them that have good conversations, but it might fall over.
Yeah, sure. Yeah.
What do you think is like a gateway? Probably a bad way to say it, but what's the product that leads to the most other products?
Good question. I find it's either life or health. And like, I think that when a young family has their first child, they just think of the death. They're like, gosh, if one of us died, this means so much more now. So that's probably the most common inquiry we get. Probably second equal with health insurance. But then we go through a process of educating them on, yes, absolutely, death risk is one of your risks, but it's not the only risk. And actually, trauma and income protection and all that is also there. So, but I think life insurance is also more palatable for younger families because it's cheaper, and at least it's something. They might not be able to get anything else, but it's something. So, yeah, but at the same time, you've also got people who think they're bulletproof and won't ever need it. So it's an interesting one from a marketing perspective.
Yeah, I find so the people that I would often buy are the ones that are witness hardship, so that
Right.
you don't have to sell them on the problem, and then they're afraid of losing something, business, or house, or they're afraid of letting someone down. Probably the main ones I've seen that people, because I don't know how I booked 464 meetings this
Wow.
year. And probably, I don't know how many leads that is. And 54% of the leads were converting to appointments. So,
Right.
not the ones that answered. That's just like people not answering too.
Okay.
But you're trying to, you're almost convincing me maybe I should try health insurance again. Because when you run ads, it's like, for example, if I was trying to attract tradies, I would wear a hard hat, I would wear high vis, I'd be standing doing stuff with a hammer, or maybe doing it badly as a hook. I have no idea how to do this, but I do know insurance or whatever.
Right. Gotcha. Yeah, that's a good idea.
But the whole game is like, so when I did the health insurance, kind of messed up, but we were outside a hospital We weren't recording people, but we are just reading the average wait times on urgent stuff, like 5 weeks for cardiac like specialist support. I'm like, dude, you got a heart problem. Why are you waiting 5 weeks?
Yeah.
I'm wondering if you could actually qualify, like use a different qualifier, but still talk about health insurance. Is the commission similar in terms of because the premiums are higher for health insurance, or is income protection just so much higher?
Life, trauma, income protection typically are a lot higher. They're about the same as each other, but health is usually around half or 3/4 to half, depending on which insurer it is. And I think it's just because there's just so many more claims associated to. Well, they're smaller claims, like they're not like big lump sum life claims, but there's so much more admin that goes into continual claims versus just a one-off lump sum claim. So, I remember years ago, I don't know if this is still true, but one of the insurers said that health insurance was almost a loss leader for them, but it was an entry, like you say, gateway into the rest of the products. That can't be true of other companies because NIB, for example, are solely health insurance, or at least they used to be up until recently. And they must have been making money, so it can't be a loss leader on its own. But just to say, the margins are thinner, I'm guessing, from the insurer's perspective.
Is the premium, like, say for example, you get a higher commission as an advisor for those other products, but with health insurance, the premium, is it more expensive that counteracts that? Like the actual commission works out to be the same from a dollar value, or is it still half?
It's still about half. Yeah. So someone was spending $1,000 a year on life insurance, we get twice as much as if they're spending $1,000 a year on health insurance. But health insurance is a long game, and if you're wanting to build up a business that has a strong renewal, like recurring income, you'd always put health insurance on the highest renewal you could and the lowest up front. You can dial up and down your commission options, only because you typically know it's going to be a long-term cover that people hold for a much longer period. So it's just over 10 years, you're going to be much better off with a higher renewal on that than a higher upfront.
Yeah, and I have a flatmate that walks through randomly.
That's
living room, building a business, mate. And I out here with fancy offices on the slopes like you.
Good on you, man. It's awesome.
Does the health insurance often just sell on itself, or is it like a burger? Like, you know what I mean? Do they usually want fries with that, or is it what percentage, if you had to guess, would just be health insurance? Like they come in, I want health insurance, but just health insurance.
Yeah. I think if you do your job well as an advisor, it's this fine line. Like you want to follow the instructions of the client and not overbear them with anything else, but at the same time, we have an obligation to educate. So often I'll say, yep, look, we can get that arranged for you as well. We do also advise that you look at these other risks. Whether you take out cover on them or not is entirely up to you, but at least understand these other risks so that you're informed and maybe you can revisit them at a later stage. And I'd say if you do that well, often things can be tacked onto it. And the insurers will incentivize this because they have multi-cover discounts. So that the more types of cover you put together, it discounts everything. So sometimes there's a bit of offset there. They can fit in a bit of life insurance and it doesn't end up costing much more because it's brought the cost of the health insurance down slightly. But yeah, I'm always trying, like I said, I'm always trying to get people to go wide rather than deep. And it's an analogy, well, I don't know, not analogy. It's a phrase I use quite a bit so that people understand that even if all you have is basic health insurance, it's better to have basic health insurance and life and trauma and income protection so that in any given event, you've got something there, as opposed to having health insurance with all the add-ons and you're covering everything under the sun. But if that's all you have, you're putting all your eggs in one basket, So it's spreading risk. Real similar to investment strategy, I suppose, just diversify and spread.
Yeah, don't keep all your eggs in one basket. Well, it's like, it makes, it's just good advice. Like, you got health insurance. Okay, you get care quickly, but now you have no income while you recover for 6 months, so you're cooked. So it makes sense. Is it, I believe as well, you got to give people what they want before you give them what they need, wrap the medicine in ham and earn their trust because they think you're just going to flog everything.
Yeah, sure.
Would you think it, like, how often would they just get health insurance? Like if they just wanted that, is that rare?
Yeah. There's very seldom they don't want to talk about anything else. Health insurance is usually front of their mind, but they're usually open to talking. And I'm very I guess maybe some advisors can come across really pushy. I deliberately try not to be. And that's what I said before. I'll say to them, I think we should talk about these other things. Don't have to do anything about it, but just at least be aware of it for a later date. And that's often kind of a no obligation kind of conversation. And most people are happy to do it. And most of the time that will result in something being actioned. Because I think once people become aware of their risks, they do want to do something about them. But to the newcomer to insurance, they hear about health insurance or life insurance, and those are the only two things they might even know about. And having been taken through and thinking through the impacts of all these different events, I found more people appreciate it than not. So I'm never afraid to try and widen the discussion.
Yeah, I mean, and health insurance, like I was interviewing this advisor, he was saying, I like health insurance the most just because more people claim the retention's better, which just makes sense. It's like you buy this thing and the public perception is it's a waste of money because it doesn't work because I never claimed it. With like, 8% of people that thinks it's the most incredible thing ever. Whatever the odds are. But it's so you're actually inspiring me. Maybe I should do some health insurance ads again. Because I interviewed this guy and just asked him everything about income protection and just try to educate people, like agreed value for business owners and stuff.
Right, yeah.
But yeah, you're not tapping into an existing problem. You're trying to help them imagine a problem that they didn't know existed until they saw the video.
Yeah, sure. Yeah, it can get that way with the technicalities of the products for sure.
Yeah. What would you like? Let's say, what's something important? What's an important realization you want every client to have in each meeting? Like, what's something that you don't have a perfect structure for, but you always try to at least touch into that part?
The perfect realization, I think it would be that it's not as expensive or as complex to deal with these problems as they think. It's not to say it isn't complex. I can't avoid the fact that there are some things that are complex. We make it as easy as we can. But insurance doesn't have to be, you don't have to be insured up to your eyeballs. There are ways to make it affordable. And so I wouldn't shy away from a conversation about insurance because of the fear of getting sold up far beyond what you can afford, that would be, I think, my biggest thing, that they can solve the problem and it doesn't have to break the bank.
Yeah, money, yeah, because it's like a painful thing. It's like, they want to alleviate some pain with a minimal amount of friction, and they don't want to face it or acknowledge it, and that's probably why the attrition's so good.
Yeah.
Like, what is that? Do you have any numbers or metrics on how many people stay? Is it like 90%? Is it like you just got to get them in, and that's the whole hard part of the business?
Yeah, that's definitely the hardest part for sure. It used to be like, I think common advisor practice used to be that you get them on and then you just leave them for years. You know what I mean? Like, just didn't touch them. But of course, we've got quite a good, robust review system that we have to have now, and that's a good thing. So it's brought to their attention all the time now, far more than it used to be. So they can't quite set and forget like they used to, which is a good thing, because as their life evolves, so should their insurance. But no, I think if I think about, I'm 17 years in now, and so in that time I've seen a lot of different people's life stages, and I'd say that even when everything else falls off, health insurance remains. So yeah, that's definitely the goal. I don't know what the numbers are, but there'd be a lot higher retention than anything else.
It's interesting. Yeah, so I was looking in the sales and the business side of things. There's time to first value. So for example, in an agency, if there was an agency called Gym Launch, and they would get clients for gym owners, and they found that if they got a high ticket client for their gym owner, in the first 2 weeks, the lifetime value of that client was triple. So you identify the most important thing to achieve. Same thing with staff. So there's something that the staff, either culturally or financially or in terms of behavioral accomplishment, where if they achieve that, they're likely to stay much longer.
Yeah,
like reverse engineering that. So I'm thinking that probably works the same with insurance, because time to first value is time to first claim.
Yeah.
How often do they claim? Like, is it once every 3 years? Is it 2 times in their life?
Yeah, on health insurance, I feel like we get claimed all the time. We do, but it's across so many clients. So to give you a number per client, it would be hard to know. It's definitely more in the families because the kids claim a fair bit. You know, they'll get an ear infection, go see a specialist, whatever it might be. Oh, look, if I had a whole family insured, like mum, dad, and 3 kids, I wouldn't be surprised if there was a claim coming in every couple of years. That doesn't have to be a huge claim, but it's them interacting with their policy and getting a kind of positive experience from that because they managed to claim something and see some value from their premiums.
What is their perception of that claim? Like, is there a type of claim they see as more valuable? Is there something in the health insurance where they're really grateful for it? Is it better to have like the dental stuff included, even though it costs more, but they see it as valuable?
Yeah, sure thing. It's a catch-22 because people, for example, people love the specialist add-on because they know that they'll probably use the specialist cover more than they'll use the surgical cover. But the downside to that, of course, is that it costs more to do that. And philosophically, we kind of saying to people, hey, you can insure anything really, like medically, like GPs, optometrists, physios, like you can get cover for all of that kind of stuff. But the cost versus the benefit probably isn't there unless you're claiming all of it all the time. Therefore, our philosophy kind of is, hey, just insure the things that you can't afford to sustain financially yourself. And when budget's under crunch, sometimes they'll opt to remove the specialist option, but they don't like doing it because like, oh, that's the one I claim on all the time. It's like, yes, that is true, but you can also afford to financially absorb that cost if you had to. Whereas if you needed to go for neurosurgery, you couldn't absorb that cost. So if you're having to pull costs back, you've got to take out the more commonly claimed elements of the policy to keep the bigger ones. So yeah, there's a catch-22 to the perception. They want the things that they can use all the time, but that comes with monthly cost.
Yeah, well, so where do the people get cooked in the health insurance part? Is it still the same where you get it underwritten, all their health disclosed, all checked from the start? Once it's set up, they're good. Or is it like if they have this illness, they can't claim on it again? Like where can you get cooked in health insurance?
Do you mean can they claim more than once on the same issue?
Yeah.
Yeah, fully. Yes, and that's the beauty of it. Like with trauma, for example, trauma cover is typically a one-time claim unless you're buying the add-on for the buybacks or whatever else. Health insurance, you could have 10 surgeries for the same thing and it would all be covered, as long as it's within those policy limits. And the policy limits are pretty high. Like surgery sits, 500,000 a year, 600,000 a year. One of them's unlimited, and it resets every year. I mean, I've got a claim that's been going on, a cancer claim for 7 years now. It was originally terminal. Now she's in kind of not quite remission, but it's under management, and she's in well over $1 million worth of surgical and chemo, and but because it resets every year, she's able to just keep claiming for these drugs that are keeping her alive. So yeah, that's why I say that's the one that sticks because it's the one that you can use over and over again.
Were you ever shocked at what sort of drug was inaccessible that saved someone's life? Not the specific drug, but just like the government can't fund it. It's been approved. Maybe it costs 80 grand. And then all of a sudden, it actually saves their life when they look like they're critical or something like that. Have you ever been shocked by a drug's performance?
Yep, I definitely have. And that one I was just talking about is a great example. There was a brain tumor and it was too big. They couldn't surgically remove it and chemo wasn't shrinking it. So they had to go and access non-pharmac drugs that the government didn't cover at the time. They've covered one more of them now, but still not at the time. That shrunk the tumor to the point where it was operable. And now she's under just management. So she's gone from stage 4 terminal to she's still alive 7 years later, and that was due in large part to access to those drugs. So they can make a huge difference. And I actually find, like, when you talk to people about what's driving them to get health insurance, yes, it's definitely the wait times, but the bigger thing is actually more people are realizing that getting non-pharmac access is huge because everyone knows someone that's had to give a little page, because even if they had health insurance, maybe it didn't cover non-pharmac stuff and they've still got to raise hundreds of thousands. Like this claim I'm talking about, it was $30,000 a round, and every round was every 6 weeks. So most people just can't afford that. But if you're in a position where your partner is going to die unless they have this thing, what are you going to do? You're going to put the house up? I mean, it creates these. Well, having the insurance in place avoids these moral conundrums of, you know, the person who's getting the treatment goes, no, don't sell the house because you and the family still need it when I'm gone. You're going, no, we should do everything we can to fund the treatment you need. So massive conversations you don't want to have that you don't have to have if you've got health insurance and non-farm act cover in particular. So if you're looking at marketing on health insurance, there's an option out now that AIA have, which is, well, they call it cancer care, which is basically it's health insurance just for cancer. And it gives you access to all the non-farm act stuff. It's surgery, it's everything. And it's like 25% of the cost of full health insurance. So there's a lot of people, I'm like, hey, if you can't afford health insurance, at least get this cancer cover, because that's the big one. You know, that's the thing most people are scared of. So there's heaps more options now that you can market to. And that might be a good angle to take, actually, come to think of it. Not just health insurance, but non-farm act cover just on its own.
Yeah, because I was struggled with it. Like, I never heard of the name until advisors told me. I might say non-government funded drugs.
Sure, yeah, that's probably a better way to do it for the common person.
But like, have you noticed a change since you first started to the perception of the health system? Like since COVID, you know, people leaving, struggling. Maybe the government has less money for non-farm, or the innovations improve. How you sort of seen public perception change around insurances?
Around the public system, or
just like what insurance becomes important? Like, was health insurance always important, but now it's suddenly more important? Or
yeah, what's funny, so I started in the industry in 2008, so just, you know, around the recession, and income insurance was big at the time because it was a financial recession, so suddenly protecting your income became a really big priority, and redundancy cover and things like that. So that was big then, and, you know, demand changed and perception changed then. Whereas now we've come through a different kind of recession where it's been a health induced, you know, global pandemic and all that. So the income protection hasn't been the big one; it's been health insurance. So it's funny how world events bring different things to mind in the public psyche. Like I say, it was more income cover then, and it's more health insurance now. So I guess as things continue to develop around the world, it's be interesting to see what happens. But I've definitely noticed people always used to complain about the health system, but now they're like, no, we know it, we've seen it, we've got a relative who's been through it, or whatever. That's much more closer to home than it ever used to be. So yeah, it's definitely the hot time for health insurance, and we're still grossly underinsured as a nation. I don't know why the government isn't making health insurance premiums tax deductible, because they should be incentivizing people to take load off of the public system and get health insurance and get into the private system, because that's a win-win. Alleviate the public system and get people better care, you know? So, yeah, if you should probably lobby that.
Yeah, we'll start now.
Yeah.
Yeah, we'll clip it up. Well, what about from a business standpoint, like the fluctuations in the markets and how you approach it differently? Like, we're in I would say, recession now, from what I heard, but it doesn't impact people the same because their mindset and their systems are different. How, when you see certain stages in the economy, does it change either people's inbound concerns, or do you change your approach?
Yeah, interesting. Well, I'll probably answer that in two ways. Like the first, from the perspective of as a business owner, like this recession, I've had something to lose, whereas first recession I didn't. So I'm much more acutely aware of the impacts now. And I would say, coming back to part of the original question about buying client bases, this is where scale really helps, because we've seen a lot come off this year. And I think a lot of advisors have seen a lot come off, or had persistency challenges. But because if you've got a scale, like if let's say you drop 10% of your clients because they just they couldn't afford things, whatever, but the other 90% were experiencing premium inflation of 10%, which is about where it sits, it seems, then you've recovered that 10% loss. You know, like the maths are, you know, just general broad, but so scale gives you that. Whereas if you had a small client base and you lost that same amount of API, it would hit you a lot harder. So that's another reason I think that scaling is a good way. You know, acquiring businesses is a good way to scale, because it helps you buffer challenging economic times, purely by the fact that you've got a huge number of people whose premiums are inflating. But from the client's perspective, yeah, I've definitely had more premium affordability conversations now than any other year in the last 17. They were always there, but now it's every single conversation. Except in the business market, interestingly enough, it's mums and dads who are having the affordability conversations. The business market almost hasn't skipped a beat. Like we're still putting cover on, like they're still growing. So that's an interesting dynamic, which is another good reason to diversify your client base, like be in the mum and dad market and the business market if you can. But yeah, how I approach it with clients is I don't resist it. Like I got to play the long game, and you realize we're just in this part of the cycle. If you can look after people now as they're reducing, they'll come back to you when they need to put it back on again. But if you make them feel bad and you fight them on it, they're just not listening to them. So I try and take a reasonably soft approach of saying, hey, I just want you to be aware of what this means. If you're canceling, these are the risks that you're exposing yourself to. But I'm totally on your side in the sense of I'll help you get there, but we'll find a way to keep as much protection as possible while still making it affordable, So it's just working with them, being on their team instead of being on the opposite side of the conversation.
And then what about leading and inspiring people through hardship? So you've got a team. Oh, the sales aren't coming in, boss. I'm struggling. What do I do? And you're like, come on, it's a weak mindset, mate. It's there. Here's a phone book. Off you go. How do you keep the positivity, shall we say?
Yeah, well, that's a great point. And I guess I can reflect on my own business because we've got the scale. We've got so much organic growth that I don't need to drive a sales machine. Like it's yes, there are targets, and yes, there are metrics we're trying to hit, but it's not picking up the phone book, cold calling. It's like, hey, the more you see people, our existing people, the more we look after them, the more opportunity naturally comes out. So I find that that's really good for morale, because even though we're not necessarily always getting heaps and heaps of new clients, they're still interacting with clients all the time. And there's a funny psyche. Like I find this as a business owner, if I've come away from a review and I've lost a bit of premium, but the clients are happy, I still feel good, And I know, again, it's a long game. So I know, hey, in 5 years' time, there might be a different point in the cycle. They'll want to add their cover again. So it's like I'm looking toward the future. So morale-wise, I think as long as you're looking after clients, whether they're up or whether they're down, it's okay. Yeah, but I'd really feel quite a lot of empathy for those businesses that are just a full-on cold call sales machine right now. It'd be hard work.
Yeah. What do you like in terms of organic growth? What do you attribute to that? Is there you got to make sure you get the reviews going every year? Is it you're asking for referrals? Is it just you're buying books and inflation's on your side? Why is it working?
Yeah, a bit of both. So we scaled pretty fast because I bought a handful of client bases, some small, some bigger. So that naturally commands the activity because you've got to get around and see them. And I think as products come to market, like that AIA Cancer Care that I mentioned, that's just been around for a couple of years. I mean, that's a whole new opportunity. So that opens up a conversation I never used to be able to have with clients. Because, for example, some clients don't have health insurance with me because they've got it through their work. Now, their work one might not cover non-Pharmac stuff. And so it used to be that you had to go and get a whole new health insurance contract so that you could get non-Pharmac access. And most people didn't want to do that because they're like, well, I'm already paying it over here for my work, or maybe the work subsidizes it or whatever. Whereas now I can go, hey, just tack on this AA thing. So it's a whole conversation that I haven't had before that I can now have, which is another reason to get out there and review. And that's the consequence of product innovation in the market. So that's one thing. But the other thing is that I'm finding that people's situations have probably, if I reflect on the last 3 years, I think I've seen more significant changes in circumstance in the last 3 years than any other 3-year set behind that. And I don't know why. It's probably, I don't know, COVID, maybe a bit of it, credit crunch. Yeah, but there just seems to be a lot of change. So what comes with change is we need to update these insurances. So like I say, often that results in reductions, but sometimes it results in opportunities. So we just got to be there in both cases.
Well done. Well, you've done a podcast, mate. So thanks for coming on.
Oh, legend. Thank you for having me, man. I appreciate your time.
No worries. So just quick stuff, and apparently live stream worked from what I can see.
Oh, nice. Cool. Oh, well, yeah.